When the US government grinds to a halt, it's not just lawmakers taking a break. It messes with regulators, it freezes legislation, and it even cuts off key economic data like jobs numbers and inflation reports. And in today's markets, that data is everything. It's what drives the Fed, which drives risk assets, which includes Bitcoin and Ethereum. Now, I know what you're thinking. That's politics. Why should I care? When uncertainty spikes, volatility follows. So in this video, we're going to break it all down, what a shutdown actually means, how it hits regulators like the SEC and CFTC, what happens to the crypto bills sitting in Congress, how it messes with macro data, and most importantly, what all of this could mean for crypto markets in the weeks ahead. All right, let's start with the basics. What does a government shutdown actually mean? In the US, Congress has to approve funding bills to keep the government running. If they miss the deadline, which is September 30th, a bunch of federal agencies run out of money. When that happens, a lot of government workers get furloughed, which basically means they're told to stay home without pay until funding returns. But here's where it gets kind of interesting. Not every part of the government shuts down. Essential services keep running. Think the military, border security, emergency responders. But the non-essential parts, those grind to a halt. And unfortunately, many of these agencies that handle financial markets fall into that category, at least partially. Shutdowns aren't new. The US has had quite a few. Some last just a few days and the markets barely notice. Others, like the 2018 to 2019 shutdown, dragged on for over a month and caused real headaches for both Wall Street and Main Street. Right now, regulators are in the middle of major crypto enforcement cases. ETF applications are under review, and new crypto bills are inching through Congress. And a shutdown on top of that, and everything slows down. Delays, confusion, uncertainty. And remember, markets hate uncertainty. Stocks, bonds, and especially crypto get choppy when nobody knows what the next headline is going to be. At its core, a shutdown is Washington freezing itself in place. And when that happens, everything from economic data to crypto policy gets stuck in limbo. Let's talk regulators and Congress. This is where crypto really feels the heat. First up, the SEC and the CFTC. These are the two watchdogs that handle most of crypto's legal battles in the US. Their enforcement teams keep working on what's considered essential. So lawsuits, fraud cases, and market stability efforts, those continue. But here's the catch. New rulemaking, approvals, and policy development, that stuff slows way down. Think ETF approvals, custody rule changes, and broader crypto regulation that's still being written. All of it gets delayed. Now, over to Congress. The Senate Banking Committee was planning to mark up a crypto market structure bill. The Agriculture Committee had a draft in the works too. Those dates were already slipping. A shutdown just pushes them further down the line. Why does that matter? Because the US is already behind on crypto regulation. Europe's MiCA is live. Hong Kong is pushing forward. The UK is rolling out clear rules. If Washington drags its feet, that gap only grows and US competitiveness takes a hit. There's also the issue of momentum. When committees cancel sessions, it's not just a delay on paper. The energy behind a bill fades. Lawmakers shift focus to other issues, and by the time they return, priorities may have changed. Crypto bills can easily get lost in the shuffle. So between slower regulators and a distracted Congress, a shutdown throws sand in the gears of crypto progress. And the longer it lasts, the bigger that backlog gets. Now let's go bigger. Macro data. When the government's shut down, agencies like the Bureau of Labor Statistics and BEA stop releasing key reports. We're talking jobs data, inflation numbers, even GDP. These are the reports the Fed uses to guide interest rate policy. No reports, the Fed is flying blind. And if the Fed is flying blind, so are traders. That means people stop trading based on facts and start trading based on guesses. And guesswork equals volatility. This is especially risky right now. Inflation's still sticky, rates are high, and everyone's debating if the Fed will cut or hold without new data. Uncertainty explodes. So, what does that mean for crypto? Well, Bitcoin and Ethereum have been trading like risk assets. When stocks wobble, crypto wobbles harder. If Wall Street gets nervous, crypto gets hit even more. But there's a flip side. Some investors will use this moment to push the Bitcoin as digital gold narrative. When governments look broken, Bitcoin looks strong. It's a powerful story, and you'll hear it if the shutdown drags on. Bottom line, no data means uncertainty. Uncertainty means volatility, and crypto lives on volatility. Now, let's shift to the legal system. The shutdown doesn't just slow policy, it slows the courts. The federal judiciary said they can only keep full operations going until around October 3rd. After that, they start cutting back, prioritizing only essential cases. Why does that matter for crypto? Because many of the biggest crypto battles are happening in federal court. The SEC versus major exchanges, bankruptcy cases from collapsed platforms. These cases shape the future of US crypto regulation. If the courts slow down, hearings get delayed, decisions get pushed, timelines stretch. For investors, that means more waiting and less clarity. Enforcement agencies like the SEC can still file new cases, but if the courts are backed up, everything gets jammed. It's like driving with the brakes half on. It may not grab headlines, but the legal slowdown is a real problem for crypto. Now, let's zoom in on the markets. What actually happens to crypto trading during shutdowns? Historically, shutdowns haven't always caused crashes. Sometimes markets shrug it off, but this time, macro uncertainty is already sky high. Inflation, rates, geopolitical tensions, traders are already edgy. Add a shutdown to that, and that edge turns into full-on stress. We've already seen some signals in crypto. Open interest dropped after the last dip, but it's still elevated. That means there's leverage in the system. And with headlines flying, that's a recipe for liquidations. One tweet from DC, and futures can spike in either direction. Watch stablecoin flows too. If exchange balances for USDT and USDC go up, traders are parking on the sidelines, waiting to buy dips. If they go down, it means people are taking risk off the table. Then there's psychology. Weeks like this can trick traders into chasing fake moves. Breakouts that don't hold, sudden dumps with no follow through. Smart traders either sit tight, widen stops, or cut position sizes to avoid the chop. Also, keep an eye on funding rates. If they spike positive while price stalls, that's FOMO creeping in. If they flip negative during a dip, that's fear and potential opportunity. So let's wrap it up. If it only lasts a few days, it's probably just noise. Regulators get a pause, Congress delays a hearing or two, macro data misses a release, markets wobble, but the big picture stays intact. But if this drags on, that's when things get real. Regulatory approvals pile up, crypto bills lose steam, court cases stall, the Fed has no data, and uncertainty stays high. That's the recipe for extended volatility, especially in crypto. Bitcoin and Ethereum could stay range bound with more fake outs and choppy action. Altcoins, which already lack liquidity, could get hit even harder. On the flip side, the digital gold narrative may grow louder. Shutdowns are temporary. The government will reopen, but the real damage is in lost time, delayed decisions, and deeper uncertainty. And in a space like crypto, where clarity is already hard to come by, that matters. So the takeaway is simple. Stay nimble. Don't trade headlines blindly. Watch stables, watch funding, and sometimes the best move is no move. That's it for this one. If you found this video helpful, smash that like button, drop a comment on what you think this shutdown means for crypto. And don't forget to subscribe for more deep dives like this one. Catch you in the next one.